I'm Ryan Iverson, and this is the Investor Breakout Weekly Insight. Let's talk about what happened this week. Lululemon is taking the field. The company Lulu on the NASDAQ just announced a new partnership with the NFL, launching a full apparel collection for all 32 teams. It's the first time the yoga giant has ever released officially licensed gear for the league or any of its franchises. The collection drops this week, featuring men's and women's styles across some of Lululemon's biggest lines, including Steady State, Define, Scuba, and Align. Shares jumped more than 3% on the news. It's another bold move as Lululemon pushes deeper into sports and performance wear. They already have partnerships with the NHL, PGA, tennis pro Francis Tiafoe, NFL's DK Metcalf, and even F1 champion Lewis Hamilton. Executives say it's about connecting existing fans while reaching a whole new audience, bringing premium performance wear to stadiums and sidelines. For investors, this is Lululemon playing offense, expanding its reach, brand power, and market opportunity in one move. Shares of Cameco, CCO on the TSX shot up more than 20% after the company teamed up with Brookfield, BAM on the TSX, for a massive US nuclear deal. The plan? Build at least $80 billion in new Westinghouse reactors across the states. Cameco and Brookfield bought Westinghouse back in 2023, and now they're ready to scale. The US government is stepping in with financing and permitting support. It also grabs a participation interest that could turn into a 20% of cash distribution above $17.5 billion or a stake if Westinghouse goes public. Cameco CEO Tim Gitzel says the deal is a vote of confidence for nuclear power. Westinghouse's fully designed licensed reactors will play a starring role in expanding US nuclear capacity and shaking up the global supply chain. US Commerce Secretary Howard Lutnick called it a historic partnership that could strengthen national security and critical infrastructure. Cameco shares closed up over $25 to $146 on the TSX. This deal isn't just big, it's a game changer for nuclear energy and a major win for both companies. Gold prices took their biggest hit in over a decade on Tuesday. Spot gold fell as low as $4,000 per ounce, down nearly $400 off its all-time high. US gold futures dropped 5.4% in New York, the metal's largest intraday decline since 2013, when it was still under $2,000 per ounce. Even after the sell-off, gold remains one of the top performing commodities of 2025, with analysts expecting prices could continue rising. HSBC has set a $5,000 per ounce target for 2026. Some traders had anticipated a pullback. Gold had climbed sharply without a pause, making profit-taking almost inevitable. Easing US-China trade tensions also cooled safe haven demand. Investors will now be watching closely as the US and Chinese presidents meet on October 30th to address trade, exports, and geopolitical concerns. This meeting could have major implications for global markets, including gold. Experts say the correction is normal, reflecting the market's underlying strength. Despite the tumble, demand for gold remains solid, and many see this pullback removing some speculative froth, not a technical reversal. Subscribe on investorbreakout.com to get a front row seat to the trends and opportunities top investors are watching closely. I'm Ryan Iverson, and we'll see you next week, and go Jays.